Peace be upon us all. Good afternoon and good morning to all of you who are joining from Europe. I hope you are all well and healthy. My name is Hakimul Bati. I am the coordinator of the Clean Energy Finance and Investment Mobilization, or CEFIM, in Indonesia. And today I will be the moderator and the MC for the first session and the third session of today's meeting. Since we are in the month of Shawwal, I would like to extend my greetings, Eid Mubarak, to all of you who are celebrating. Welcome to this focus group discussion with the topic of regulation and linkages to international carbon market. This is the fourth focus group discussion, or the final FGD from a series of discussions that we have planned and organized by the Director General of Electrical Power, CEFIM, and IEA. Ladies and gentlemen, before we start, I would like to inform you that we provide you with interpretation feature. So if you wish to listen to the translation, please click the globe icon on the bottom right corner of your screen. So click on that and choose the language accordingly. Feel free to use Indonesian language or English, as interpretation will be provided. We would like to kindly ask you to change your Zoom display name. So please use the following format: your organization name and your name. The purpose of this FGD is to discuss regulations and the role of the financial sector in the emission trading system in Indonesia, and to see the interlinkages with the carbon market. The FGD session will have 3 sessions. The first one is the essential regulations for carbon pricing and trading. The second session will be linkages to international carbon market. And the third session will be more fluid, because that would be the discussion session. This will be an open floor session for question and answer with the resource speakers. So ladies and gentlemen, without further ado, let us continue our FGD with the opening remarks. First from Bapak Dwi Nugroho, and then second from Sarah from IEA. To Bapak Dwi Nugroho, the floor is yours.
Bismillahirrahmanirrahim. Terima kasih Pak Hakim.
Bismillahirrahmanirrahim. Thank you, Pak Hakim.
Bapak Ibu yang saya hormati,
distinguished ladies and gentlemen, I will use Bahasa Indonesia to deliver my remarks. Distinguished Bapak Agus Pristiahadi, Assistant Deputy, who will join us at 2:30 p.m. Jakarta time. So who will join us later? Distinguished Bapak Edi Broto Suwarno, Director from the Capital Market Sector from the OJK, Indonesian Financial Services Authority. Hello, Pak Edi. Ms. Sarah Muarif, Head of the Environment and Climate Change Unit at the IEA. Distinguished Mrs. Cindy Siwe Masele, Department of Forestry, Fisheries and Environment from South Africa. Luca Lorea from IEA. Also Noriko Tamiya Hase, Deputy Director from the Office of Market Mechanism and Office of International Strategy on Climate Change from the Ministry of Environment, Japan. And Tad Jamieson, ETS Market Team from Ministry of Environment, New Zealand. And distinguished ladies and gentlemen, participants and attendees of this FGD, Walaikum Salam, peace be upon us all. Good afternoon for all of you. Ladies and gentlemen, let us praise God Almighty that we are able to gather here today, this afternoon, to attend this focus group discussion on regulations and linkages to international carbon market.
Tentu saja kami ingin ucapkan terima kasih kepada
We would like to also extend our appreciation to SEFIM from OECD and International Energy Agency. Thank you for the support and the very good engagement that we have had so far, particularly for the organization of this focus group discussion. As you all know, the government of Indonesia has ratified the Paris Agreement through Law number 16 of 2016 on the endorsement of Paris Agreement and UNFCCC on climate change. The government of Indonesia has strong commitment to reduce emission of greenhouse gases as outlined in the National Target or NDC of 29% with own support and 41% with international support by 2030. In the updated NDC document, the energy sector has a target of emission reduction of CO2 amounting to 314 million ton CO2 emission or 11% with own resources and 446 million ton CO2 ton emission or 15.5% with international support under the business as usual scenario. In the year 2021, the Director General of Electrical Power has carried out a piloting of carbon trading aimed at reducing the emission of greenhouse gases to achieve the NDC targets. The upper ceiling of emission or PAE are mostly located in coal-fired power plant. The measurement, reporting and verification of MRV and to increase the awareness of businesses on carbon pricing would be essential, particularly on the cap and trade and offset mechanism. Although the piloting of this trading mechanism was carried out prior to the issuance of presidential regulation on the carbon pricing to achieve the NDC and the greenhouse gases control in the national development. Nevertheless, the delivery has so far been in line with those presidential regulation. Indonesia also issued regulation number 98 of 2021 and law number 7 of 2021 on harmonization of tax regulations, where there will be tax mechanism based on the emission cap and trade for the electrical power, particularly for coal steam power plant by 2022 and 2024, and the implementation of full implementation of carbon trading by 2025 onwards. And to support this cap and trade and carbon tax, DG Electrical Power is now drafting the ministerial regulation on the procedure of carbon pricing at the power plants. Ladies and gentlemen, to support the carbon trading, the DG of Electrical Engineering Environment, in collaboration with SEFIM, OECD, and IEA, we work together to develop carbon emission trading system through a series of FGD, and today would be the fourth FGD as mentioned by Pak Bati. This program will explore the critical aspects to create practical, relevant, and contextual emission trading system for Indonesia. In this fourth FGD, we are going to discuss about regulations and the role of the financial sector in the Indonesia's emission trading system and to discuss how it links with the international carbon market. Experts and specialists from other countries will also share their experience in linking ourselves with the international carbon market, including institutional arrangement, monitoring, reporting and verification, and so on. To prepare the scheme of cap and trade scheme in the coal-fired power plants, we realized that we would need to get further input and support to develop this scheme. And we hope that this focus group discussion can help us increase our knowledge and information to implement the cap and trade and carbon tax on a better way. We hope that the participants can play an active role in their active participation in the FGD. Finally, we would like to thank SEFIM, OECD, and IEA for their support in this fourth FGD. Thank you. Waalaikumsalam. Peace be upon us all. Thank you. Waalaikumsalam. Peace be upon us all. Thank you, Pak Dwi Nugroho. And next will be Ibu Sarah Muarif.
Thank you very much, Pak Bati, and thank you very much, Pak Dwi Nugroho, for those opening remarks. I think, as you heard, we have a really excellent lineup of speakers and really wonderful experts who will speak today. So I wanted to welcome everyone to this fourth session, and wanted to say it's been a really wonderful series. So this, as Bati mentioned, is the fourth and final in a series of 4 focus group dialogues that we've been doing jointly. And we've been cooperating, us at the International Energy Agency and our colleagues from SEFIM at the OECD together to set up these focus group dialogues. And it is really meant to be a place to exchange and to learn from other experiences and to discuss plans and processes. And we've been very pleased and very impressed by how these focus group dialogues have gone so far. There's been an excellent level of participation in each focus group dialogue. All the international experts that have participated have told us that they were very happy, they were very pleased with the experience. They also learned from it, and we're very pleased to participate and glad of the exchange and the questions they received. And Pak Bati was explaining that the third part of the session today will be a bit more open and will be a bit of a discussion. And in each of the previous focus group dialogue sessions, this third discussion session has been very active, very rich. There have been excellent questions, excellent points, and it really just sort of shows how dynamic and how interested and how engaged and what kind of really good questions all the participants have been asking. I think we've heard a little bit about the goals and the aims set out, and the aim of having a fully implemented system from 2025 onwards. This is a very ambitious goal, and as I think we've seen in this focus group dialogue, there's a lot to do. There's a lot that's been done. There's an excellent amount of energy and a commitment and a willingness. But this is also a challenging policy process, and other countries have gone through that or are going through it. And our goal has really been to try and bring these experts together and these other practitioners together to share that experience, to therefore support this ambitious implementation of the carbon trading and the tax together in Indonesia. And we really hope that these focus group dialogues have done that. They've each focused on a slightly different topic, first starting with more just principles, elements of how countries have chosen to design their systems, more specifics on processes, and then looking at the issue of piloting, how jurisdictions have sort of tested systems and then expanded them, how the private sector has been encouraged to participate, or what experience has been. And due to the prevalence of the 2 main systems in the Asian region, we've had different speakers from China and from Korea come throughout the FGDs, as well as various countries from Europe and the European Commission. And today we're very pleased to have speakers from some different jurisdictions, as you heard, from New Zealand, from Japan, and from South Africa, to also share their experience. And very much looking forward to this FGD, which I think is a very interesting and good mix of topics to close with. One very concrete on domestic measurement, on domestic processes and regulations, and the other very much on this international context of having these policies and these ETSs and how that could go forward. So without further ado, I'd love to just say thank you and welcome to everyone, and I look forward to the discussion. Thank you very much.
Thank you, Sarah. Bapak Ibu sekalian, langsung saja mungkin kita akan
Thank you, Sarah. So without further ado, let us start with the first session. In this first session, there will be 3 speakers. We actually have 40 minutes. That's 40 minutes. So every speaker would probably have around 10 to 15 minutes to deliver their presentation. So let us start with Bapak Edi Broto Suwarno. He is the Director of Capital Market Regulation from OJK, Indonesian Financial Services Authority. We would like to learn about the role of OJK, or the Indonesian Financial Services Authority. To Pak Edi Broto, the floor is yours. Thank you, Pak Hakim. Distinguished Bapak Dwi and ladies and gentlemen, allow me to deliver my presentation in Indonesian language. So thank you, Pak Hakim, for the time. And actually, I am not supposed to be the first speaker because OJK is the one who will facilitate the carbon trading through the carbon exchange. So in terms of policy, that's the context, but there's no legal specific area that regulates that the carbon trading will be carried out by the security sector.
We would like to welcome your inputs because everything is still in the concepts. All the schemes based on the reviews from the people in the business stock exchange, and whether really the carbon trading will be conducted by the stock exchange. So we would like to know, because we still don't understand really what kind of instruments that would like to be used as we in the trading. So we're still doing evaluations and reviews on the concepts. Okay, please share the slides. Okay. So this is just a concept. So thank you. Pak Dwi Nugroho already mentioned that currently Indonesia is in the effort to overcome the carbon emission, because now it's already concerning, and one of the efforts to support the reduction of carbon emission is through carbon pricing and to intensify the economic value of the carbon emission so that we can reduce the carbon emission. And we are asked to explain about the role of our organization as the authority related to financial policies, the Finance Services Authority, to support the green economy. And one of the objectives is to reduce the carbon emission. And in general, carbon pricing or financing low carbon transition, in the literature by the United Nations, it's one of the instruments to finance the sustainable development related to climate change, to have the transition to a low carbon economy. And it is functioned as an instrument to transform the economic behavior on a specific goods or service. And it is one of the practice called as polluters pay principle. So they have to pay. And this carbon pricing will be an alternative for a sustainable finance through the for the government. So this is what it has been explained by the government. Okay, now let's look at the definition. And this is based on the United Nations Framework Convention on Climate Change. Carbon pricing curbs greenhouse gas emissions by placing a fee on emitting and or offering an incentive for emitting less. Carbon pricing works by capturing the external costs of emitting carbon and placing that cost back at its source. So this is the main point. And there are fees borne by the polluters. And this emission will be increased in terms of the economic value. So the mechanism for carbon pricing is as follows. The mechanism is through the trading and non-trading. If it is through trading, it's about the cap and trade or emission trading system or ETS, and the system is in this the emission the polluters can trade the emission unit to fulfill the emission target, and we also have offset emission or crediting mechanism. And this is reducing emission based on the project activities or program activities that can be sold based with domestically or overseas. Okay, and we also have a non-trading mechanism. For example, carbon tax, and it is a set of carbon pricing through taxes based on the emission of the carbon content. And we also have result-based climate finance, and this is financing on projects, and the payment is then based on the result that has been previously set related to the climate change that has been verified, and it's been covered in the regulations mentioned by Pak Dwi Nugroho. Okay, next. Okay. So this is the scheme for the carbon pricing based on the regulations. And this is from the presentation of the ministries in
Disampaikan bahwa nanti akan ada baseline dan target
January 2022.
yang merupakan acuan bagi penyelenggaraan instrumen nilai ekonomi karbon dan juga acuan bagi sektor dalam menetapkan batas
There will be
atas.
baseline and targets, and this is will serve as a reference
Batas atas emisi tidak malah mengakomodir kenaikan emisi melebihi target nasional. Nah, batas atas emisi dan
that the emission will not passing the cap. Okay, and then the maximum emission for the subsector is also set here, and it will be used for the effectiveness of the ETS. And related to the carbon trading, we already mentioned that we have like ETS, the cap and trade, and the other one is offset emission or crediting mechanism. Okay, next. Okay, so here it is. So later in the context of this emission trading, we have instruments which is called PTE. And then the offset, for the offset, it will be called SPE. So we have two instruments that will be used, and it will be developed by our colleagues related to the carbon pricing. And based on the schemes, this is based on the presentation of the ministries of the environment, and the relating ministry will be will set the cap and also the targets. And for these targets, it will be connected to the businesses, and it will be based on cap and trade and also offset. It's either they are the buyers or sellers of these instruments. And the baseline cap, as mentioned before, it will be registered in the national registration, and we will do a registration and verification, and we will produce a certificate. And after the verification, we will have accreditation, and then by the and then they will issue a certificate. And they will also have like another mechanism for the acknowledgement. And we also register this with whether they will be induced with like carbon tax or not. Okay, the trade can be done directly or through the carbon exchange, the trading in carbon exchange. And the ones doing the trading in the carbon exchange will be the ones related to carbon, whether they have surplus or deficit, whether they need carbon or whether they sell carbon. Okay, so that's the secondary transaction. Okay, next. Okay, so this is the flow for PTE and SPE registration to be traded in the Indonesian stock exchange. So the first one is related to the effect. So after it's being approved by the ministry, they will get PTE and SPE for the registration, and then the second one, they will be registered, and then after that they will be given PTE and SPE, and after that it will be registered in the stock exchange. Okay, so this is the stock exchange mechanism. This is number 4. The registration of PTE to KSEI. And then after that, SRN will report the PTE and SPE list to the stock exchange, and then Indonesian Stock Exchange will register PTE and SPE to be traded if there is no IPO documents, and then the initial pricing will be set by the government, and then the investor registration in the AB or participants. So the new businesses will register to the participant, and then they will be given a single ID and effect account. So this is for those doing secondary transaction. So they have to have a single ID and also the effect account. And then after that, the companies will report the SRN, and then they will do the transactions and informing their SID, the account number, and then the number of SPE and PTE that will be traded. And then SRN will inform KSEI the deposit process. And after that, they can start trading in the carbon exchange through the participants. And the last one is the reconciliation, and it's done daily for data consolidation. But again, this is a concept. It's not finalized yet, and the regulation is still ongoing. So it's still in the process. So the implementation will still be in the process. Okay, next. Okay, so this is the concept for the carbon trading in the exchange, stock exchange in or PPA. Okay, so currently we still have two concepts. The first one is that this carbon exchange is one of the business unit of the Indonesian Stock Exchange. And then the second one, the carbon exchange will be conducted under a specific entity. But so it's separated you which one is more efficient and which one can be started quickly, because probably the government will ask us to move it faster. Okay, so this is the concept. If we use like separate entities, so PPA, we already have like this is like for alternative tradings, but it's still doing like stock exchange as well. So we have, so after that, we'll have instruction to transfer it to the central custodian, and we'll do clearing. So the seller, AB seller, will do clearing, and it will contact the participants, and they will meet in the trading platform, and they will do clearing and settlement, and it will be kept at KSEI, and it will be reconciled with SRN, because it's the center for the registration of carbon reduction in Indonesia. So all available data should be synchronized, so it won't, so double counting will not happen, things like that. Okay, and it will affect the NDC if we don't synchronize all the data, because carbon trading is just one of the segments in our effort to finance the carbon reduction in Indonesia. Okay, next. Okay, thank you very much. I think that's all. Again, this is just as a concept, so we need to coordinate intensively to prepare all the infrastructures and the mechanism for the carbon trading to create effective and efficient carbon trading that can be used as a pilot project. Okay, I think that's all from me. Thank you. Thank you very much, Pak Edi Broto. Okay, ladies and gentlemen, they are ready. Our colleagues from the Financial Services Authority, or OJK, are ready. They have two options, whether it's by BP or through a separate entity. Okay, I can see that Pak Kus from Marves is already here with us. Pak Kus,
untuk memaparkan presentasinya.
Can we start the presentation? Pak Bati? Ya, Pak Ilham?
Ternyata padat banget jadwalnya, Pak Bati. Kami mohon maaf sebesar-besarnya.
Pak Kus has another schedule. I'm terribly sorry, but Pak Kus instructed me to speak on behalf of him. So it's about the Presidential Decree number 98. Yes, so Pak Ilham will speak on behalf of Marves. Now let's see what is happening in the macro system. Please, Pak Ilham.
Bisa ini Pak, sudah terlihat.
Can you see the presentation? Yes.
Ya,
Pak Ilham, mungkin waktunya nanti 10 sampai 15 menit akan sangat bagus.
It will be about 10 to 15 minutes. Okay.
Makasih Pak Bati.
Thank you very much, Pak Bati.
Dalam bahasa Inggris ya, jadi kita siapkan dulu bahasa Inggris.
I'm really sorry. I thought it's in English, so I prepared this in English. No worries, no problem. Again, based on the invitation from OECD, so this is our title. This is about the opportunity of linking international and national carbon market in Indonesia and plans to expand Indonesia's ETS to other sectors. So let's just go straight to the carbon pricing mechanism. Okay.
Indonesia ya, this is carbon pricing ya. Actually, this is carbon pricing.
Sorry, I'm sorry. It's NEK is Indonesian term, so I'm changing it to carbon pricing regulation.
Based on the President regulation, Pak Bati, jadi carbon pricing is hosted by sector and subsector is Article 2. Article 2, paragraph 2. And then for the implementation, there is two mechanism. There is emission trading and offset emission. And then for the others for the instrument, the carbon pricing is carbon trading, RBP, and carbon charge or carbon tax, and other mechanism. For the sector for the ministry, implementation is there is Ministry of Agency, Regional Government, Business and Public. This is Article 2, paragraph 3. And for the mechanism overseas carbon trading is we have to NDC achieve first. So the mandate Article 51 in paragraph 3, there is transfer for the carbon unit does not affect the achievement NDC. The point is one, and the point 2 is in practice for carbon trading can be carried out after the sector ensure that NDC target achievement plan is set. So it could be the beyond of NDC or out of scope NDC is easy, not easy, is potential to international carbon trading. And there is SRN. SRN is a national registration system, and LSMRV. This is KLHK. Is continue develop SRN and collaborate with ministry. As we know, there is ESDM already Apple Gatric, ya Pak Bati ya. So KLHK should be collaborate with Ministry of Agency. And then for the forestry RED Plus arrangement. The second is for the principle, Pak Bati. The President regulation also established the institutional framework. There is non-market approach under Article 6.9 to establish the sustainable development and poverty reduction. So we have experience in this regard, especially in terms of forestry and land use project. And in the future, energy sector will be open to cooperate international carbon trading. And then for the second one is we will apply cap, trade, and tax mechanism for the implementation carbon pricing, and the Indonesia will impose in July for the carbon tax in power generation. And for the two-type carbon trading, emission trading and carbon offset, and two-type non-trading, carbon tax and result-based payment. ETS whereby entity with higher emission purchase emission. This is for the ETS system. That's entities with higher emission can purchase the emission permits or emission quota from entity the lower emission. And for the this is for the principal carbon trading too, and then there is opportunity for the international cooperation through the linking international carbon market. As we know, the principle, the carbon trading, there is emission trading and offset trading. And then there's a carry out for domestic and international carbon trading based on the president regulation through by the cooperation, Pak Bati, through by cooperation by relevant minister. So relevant minister like the Ministry of ESDM can be cooperate to the international carbon market, Pak Bati. But there is condition. The first one have to support. Jadi in the context to achieving NDC target first and increasing ambition, maybe can put in the NDC conditional. We have the NDC unconditional and conditional. We can put in NDC conditional for the 41%. And also for the business actor. Business actor may trade with international business actor after obtaining the approval by Minister of Environment. So all of these have to be get approval by Minister of Environment. And then for the Pak Edi tadi, Indonesia will conduct carbon exchange is already decided, Pak Bati. Tinggal Presiden, tinggal Permen, Ministry of Regulation will be released and appoint the what is the BI ya, BI Indonesia apa namanya Pak? Indonesia Stock Exchange, sorry. The carbon exchange will be operated by on the Indonesia Carbon Stock Exchange (BI), and BI will be authorized the OJK Financial Service Authority. And the carbon market will be automatically integrated to SRN, and also will be operated by Ministry of Environment and Forestry. So furthermore, linking market will be open to regulated and meet international demands because the regulation is open to the international linking market, Pak Bati. And there is existing one for the linking market, Pak Bati. ETS with Switzerland and ETS. Not only ETS, Pak Bati, but also offset. Voluntary market can be linking, Pak Bati. Like in this one, Japan and BOCM, GCM. GCM is a voluntary market, Pak Bati. So and then CAR and PCS is voluntary. So the linking market can be open of the ETS and offset market, or we can say we can know that there is a voluntary market. So, but the important, Pak Bati, because the important advantage of the emission trading, if it is feasible to connect the system across border. Jadi keuntungan dari carbon trading ini, jadi harus di-connect dengan cross border. Jadi keuntungannya itu Pak Bati untuk di dalam pengendalian perubahan iklim. Kemudian linking can be done either direct and indirect, those offering the efficiency gains. And then for the linking, different system create direct or indirect with each other. System link and direct of emission allowance of one scheme can be surrendered in another. Jadi ini ada beberapa prinsip-prinsip. Nantinya kita akan bisa open Pak Bati untuk linking international market. Mungkin itu Pak Bati. Kemudian ini sedikit kenapa why we need the linking market, because we have the country platform of energy transition. If the energy transition can be implemented, if there is support, especially for the financial support for the energy transition. So in Indonesia country platform, there is a blended finance. There is a there is many sources of funds have to be mobilized in the blended finance for the energy transition. So the way Indonesia is open and also need or demand to the linking market, Pak Bati, because we have the energy transition platform. Maybe that's all, Pak Bati.
Terima kasih banyak Pak Ilham telah menjelaskan kepada kita tentang opportunity gitu ya, lingkang international market, dan terakhir yang paling penting tadi ternyata Indonesia juga memerlukan karena Indonesia punya country platform untuk.
Thank you very much, and it's actually something that we need because we have the energy platform for this. Okay, ladies and gentlemen, we will continue. I don't know whether we still have enough time, but let's continue to the next speaker.
She will talking about the establishment of a national system for.
She will talk about the establishment of national gas measurement from South Africa.
Cindy Siwi, time is yours.
To the South African delegates, the floor is yours.
Cindy Siwi, could you hear me?
Good morning, everyone.
Okay, clear now. Appreciate if you will give the intervention in maybe 10 minutes. Thank you.
Thank you. Cindy Mashele from the Department of Forestry, Fisheries and in South Africa. I off my camera because of having network has low bandwidth on my side. Okay, I'm going to be presenting to you how we have set up a greenhouse reporting program. In the presentation, I will cover how defined our then I will touch reporting tools and guidance documents that we have developed to support this reporting program. We, as a country, we have greenhouse gas reporting regulations in 2017. So we have been implementing the greenhouse gas reporting regulations for 5 years now. We have had 5 reporting cycles. And during this 5 years of implementing the regulations, we have learned some lessons that we have then used the reporting program and improve what needs to be done in terms of greenhouse gas emissions. We have also set up a reporting system, which I will briefly touch on later in the presentation. So in terms of reporting boundaries, we have defined reporting on our greenhouse over which they have operational control. In their organization. And when we look at other reporting programs, we have seen that programs are based on financial control boundary, and some of them are based on equity share. But we have decided to base our reporting program based on operational control, because in this case, the organization has direct control over the activities that they are conducting, which generate GHG emission. Authority to introduce operating policies that make emissions. So in the regulations, we have also defined the threshold for reporting. For each Ipcc activity, there's a threshold that's defined for each. So the thresholds are based on installed capacity and not actual consumption. In manufacturing, the threshold is 1 million bricks a month. So if a facility has a capacity to produce 1 million bricks a month, then they need to report the greenhouse gas emissions. Can you please move to the next slide? Okay. Yes. So the activities that need to be reported include emissions of fuels in stationary devices, and it includes domestic aviation, and also fugitive emissions from coal mining and oil and gas operation, as well as some of the emissions from the transport sector. The others including companies that are conducting activities, for example, in the mineral chemical industry sector and the metal industry. It includes activities from forestry plantations. So companies in that are conducting forestry plantations are required to then report the carbon sequestrated from their activity. For combustion installation is the megawatt thermal of the combustion devices. So if a company wants devices that are up to 10 megawatt, program and reports, and we go by companies need clear methods to report their emissions. So for each activity, we define the tier method as defined by the Ipcc method. How lower tiers are to be used throughout the reporting program, but we expect companies to move to using higher tier methods. And we have built in a transitional period of years within the regulations to companies to get ready to be able to systems to be able to meet the requirements of the regulations. Can we go to the So in terms of, I touched on this, in terms of the activity we covered, is the energy activities as well as IPPU activities and affluent waste. So if a company triggers any of the thresholds that are defined in our regulations, then they are required to then register on our reporting system and report on an annual basis. So reporting on our reporting system is based on a calendar year. So companies are given a period of 3 months to compile information for the previous calendar year and come in and report on our system between January and March. And we have now information for about 5 years in our reporting system. So previously, companies were reporting manually using forms that we have designed, but we have then developed an online reporting system which allows companies to come in online and register and then report their emissions. So we have also developed guidance material, which guides companies on what needs to be reported and how they need to quantify their emissions, because we have picked up that this guidance material is required. So we have developed the methodological guidelines for quantification of greenhouse gas emissions. And we have developed a guideline on how, on the process that needs to be followed by us as the competent authority on validating the information that's reported and what needs to be done in terms of verification. And this links to the South African gas emission reporting system because the system is developed based on this guidance material that we have developed. So the guidelines, the methodological guidelines, the main objective of the guidelines is to provide additional guidance to data providers in terms of estimating their emissions. And it also provides guidance on the methodology that applies to the different sectors that need to report in our system. I have provided a link to our guidelines in the next slide, which contains the guidance material that we have developed. And data providers have found this guidelines very useful because it becomes clear in terms of what methodologies need to be followed. And there's a common methodology that is followed by each data provider. So the next slide shows the material that's provided within the guidelines. So it follows the good practice guidelines that is provided by the Ipcc and how then it needs to be applied to each facility that is reporting on our system. It provides guidance in terms of the relevant Ipcc boundary and what information needs to be collected by data providers and what information is not required to be reported in our system. For example, in our reporting program, we don't include emissions from road transportation. So it provides guidance in terms of what information is included in our reporting program and what is excluded, and what needs to be done when the data is collected, and what conversion units need to be applied by data providers when they're reporting. So based on methods that need to be followed up by data providers when they're reporting to us. Also, for each greenhouse gas emission, we provide guidance in terms of the tier method that needs to be used, and which chapter is relevant for each sector within the guideline material.
Cindy Siwe, please indicate if you need our colleague to move the slide.
Yes, please move to the next slide. Next. Yes, and okay. So in this case, what I'm demonstrating is the kind of material that we have in our guidance material. So for each activity that needs to be reported in our reporting program, we provide which Ipcc activities are applicable and which greenhouse gas emissions need to be reported, and which tier method needs to be applied for each greenhouse gas, because this is important so that we ensure that data providers or companies follow a common methodology when they're reporting to us. Can move on to the next slide. Okay, so now I'm going to touch on the technical guidelines for validation and verification of greenhouse gas emissions. So we have developed additional guidance on what needs to be done in terms of validation and verification of the information that we're receiving from companies. So this guideline provides guidance in terms of what needs to be done by us in terms of the validation process that needs to be followed. And we have also provided guidance because our regulations require that in cases where there's material discrepancies that we pick up in the validation process, that we trigger some of these reports for independent verification. So it provides guidance in terms of the independent verification process that need to be followed. Can go to the next slide. Okay, so there are three aspects that are covered in the guideline. The competent authority review, that is the quality control process, and then the independent verification process that needs to be followed by independent verifiers, and also the accreditation process and competency requirements for independent verifiers. So all this information is provided in the guideline material. I will briefly touch on the competent authority review process, because this is the process that we are directly responsible for as a department to ensure that the credibility of the information that is reported under our GHG reporting program. You can go to the next slide. So this slide covers the whole process that needs to be followed from the data collection process up until the report is approved by us. So we have built in a validation process within our reporting system. So within the guidance material, we provide guidance to data provider in terms of the data collection process to ensure that there's archiving of information from the data provider side, and also that they use and technical references that are used by data providers to estimate their emissions. We can go to the next slide. And in the submission of data, we provide two options for data providers where they can subject their reports to independent verification before they submit to us, or they can submit the data to us before the independent verification process is completed. In both cases, the competent authority review process is still done to ensure that there are post-submittal checks, quality control checks that are done. And also there's materiality risk review, and then a decision is made by us whether the report is can be approved or it needs to go to an independent verification process, which is a process that's not that's independent of us and independent of the data provider to ensure the credibility of the information. So in terms of the post-submittal quality checks that we do range checks. We also do unit checks, and we also check with other sources of data to ensure that the information that is reported in our system is in line with other information that might be available elsewhere, and to ensure that the information is credible. You can move on to the next slide. Yes, this I have briefly touched on we do trend analysis as well during the quality checks to ensure that to check if the data is in line with data that was provided by companies from previous years, to ensure that if there's increase of emissions from the different companies, that can be traced and can be explained as well. Can move on to the next slide.
Could you please wrap up in 2 minutes? Sorry.
Okay, thank you. You can move on to the next slide. Okay. So what we have done is then using the guidance material that we have developed, we have now developed a reporting system, which is, you can move the slide, yes, so that it's in line with our reporting regulations in terms of the registration process, and also what needs to be done when the registration needs to be modified. And also it provides functionality in terms of the reporting process as well. Within our regulations, we have also built in a country, we're trying to build a country-specific database emission factors, so we improve the accuracy of our emissions. So the system is designed to address the requirements of the regulations, and also has built in the quality assurance process that are in our verification guidelines. Can move to the Next slide. Can move to the next slide. Okay. So as I have indicated, the system allows for registration and also for reporting and establishing of countries specific GHG emissions. And also it has built-in validation and verification process. Information is validated. It's that's responsible for carbon tax used for our use. Thank you. I think I have covered everything on my side. Thank you.
Thank you, Cindy, for sharing to us about the establishment of a national system from the South Africa perspective. Very useful information. Bapak Ibu sekalian, kita masih punya 2 sesi lagi. Gitu
So,
ya.
ladies and gentlemen, we still have 2 more sessions. And there would be some question and answer sessions as well. But however, since we have limited time, let us just continue with the second session. And the second session will be moderated by my colleague, Kieran. The screen is yours.
Great, thank you. The purpose of this second session is to talk a little bit about linkages and within the context of Article 6. So an important advantage of emissions trading as an instrument to tackle climate change is it's possible to connect systems across borders. And there was an earlier presentation referenced some of those linkages, such as the EU and Switzerland. So the linking of 2 or more ETSs creates a larger carbon market, which can provide the participating countries or regions with more cost-effective and efficient options to reduce their emissions. In theory, linking can be done directly or indirectly and can lead to price convergence. And this in turn delivers efficiency gains. In reality, however, for linkages to work, jurisdictions will need to find compromises to align design elements of their systems. To do this, Article 6 of the Paris Agreement sets out principles on how countries can pursue voluntary cooperation and reach their climate target. These high-level principles were intended as a basis for countries to develop the detailed rules on how to implement Article 6 in practice. In reality, this proved complex and contentious and led to years of delays. Fortunately, at COP26 in Glasgow, we had huge progress, and the parties to the agreement adopted rules and guidance on Article 6. And this paves the way for full implementation of international carbon markets through the Paris climate regime. And to take us through some of the complexities of Article 6, we're very lucky to have 4 experienced practitioners to share their knowledge and accumulated expertise. The first of these speakers is a colleague of ours from the IEA, Luca Lore, who works in our team at the Environmental and Climate Change Unit, where he leads our work on the IEA OECD Climate Change Expert Group, and also represents the IEA in all Article 6 related discussions. Luca will provide an overview of Article 6 and the Paris Agreement Rulebook to broaden your understanding in the context of this discussion. Thank you, Luca. I'll pass it over to you now.
Thank you very much, Kieran. Can you just confirm that you can see my slides and you can hear me well? Yeah, perfect. So good morning and good afternoon, everyone. Thanks very much for the invitation. As Kieran just suggested, in the next 10 minutes, I will provide you an overview of Article 6 and the associated rules that were agreed at COP26. To do so, I would like to start by giving you an overview of the history, of course, very quickly, of the international capital markets within the UNFCCC framework, and then why we need Article 6 in first place, and then look more in details what is Article 6 was agreed at COP21 in Paris, and then what was instead agreed at COP26 as part of the Article 6 rulebook. And then I would conclude with some thoughts on Article 6 going forward. What's the outlook for that? Basically, Article 6 involves, as part of Article 6, we'll see later on, the exchange of credits among different countries. But this is not a new concept within the UNFCCC framework. Actually, international capital markets were already used and tested since now almost 30 years. And they started with the emergence of the Kyoto Protocol, where some flexibility mechanisms were agreed upon. These flexibility mechanisms were still a little bit in the makings, and the degree of support to this mechanism were relatively low until it was signed the first ratification for the first commitment period of the Kyoto Protocol, where what we refer in literature, we experienced, so to speak, the gold rush, where there was quite a lot of number of projects, especially for those who are familiar with the clean development mechanism of the Kyoto Protocol. There was quite a lot of indeed projects and credits that were issued by these projects. But then for a number of reasons, after 2013, with the lack of the ratification, immediate ratification of the Doha Amendment, and therefore a lack of enforcement of the second commitment period of the Kyoto Protocol, the price of these credits in the market really went down quite dramatically. And this led to a sort of a fragmentation phase where at the beginning we had just these flexibility markets in the UNFCCC, but instead with the fact that the price of the credits was quite low, this led to the creation of other type of markets, capital markets broadly in the world, broadly speaking, up until the Paris Agreement was agreed upon at COP21, and it included Article 6. We're going to get to that later on. And so now there is more scope going forward for countries to use market-based mechanisms within the framework of the UNFCCC. And so with 2021, that marked the beginning of the Paris Agreement, it also marked the agreement of the rules. And so now we are seeing early signs of revived interest in international capital markets. So why do we need Article 6 in the first place? So let's start from the basis, as we heard before from previous speakers. Countries have mitigation targets that are brought forward to the UNFCCC through their NDCs, through their national determined contribution. And these are generally domestic policies, domestic measures. And Article 6 was conceived as a way for countries to work together to achieve their domestic measures. So to achieve and also go beyond, to enhance the ambition by working together. And this could have two advantages. The first would be to reduce the implementation costs, so be more economically effective. And the second one is that it could allow for higher mitigation to be achieved at no additional cost. But so what is Article 6? As I was saying, Article 6 has basically three pillars. Two of them are market-based, and a third one is non-market-based. The first one is Article 6.2, and Article 6.2 allows countries always on a voluntary basis to collaborate with each other, to involving the use and the transfer of, we can think of them by simplifying as credits, but basically they are called in jargon internationally transfer mitigation outcomes, or ITMOs. And these ITMOs can be used towards NDCs or can now be used also towards other type of mitigation. There is no supervision from the UNFCCC of these bilateral exchanges. The only thing that countries have to do when they do this bilateral exchange is to respect an accounting framework. And the rules for this accounting framework was agreed at COP26. We're going to see that in the next slides. The second pillar is instead a mechanism, which is called the Article 6.4 mechanism. And this allows to issue credits. So there is an international oversight of the UNFCCC here, and there is a more involvement also from the private sector. And importantly, this mechanism has to deliver what we call an overall mitigation of global emissions. So it has to result in net emission mitigation. And it also has to provide a share of proceeds to the adaptation fund. Some of these rules, again, they were agreed at COP26. We're going to see them in the next slide. And then there is a third pillar, which is the Article 6.8, which instead is a non-market, involves non-market-based approaches for mitigation and adaptation. And these you can think, and again, by simplifying, a sort of results-based finance. So they were going to focus on the first two, the market-based instruments. And so what was agreed at COP26 on Article 6, so it took us around 6 years, and in some of the next speakers have participated to the negotiations. I can attest that were quite long and hard negotiations, because there were a number of technical issues that were really difficult to carve out. What was agreed at COP26 was basically the implementation rulebook. What I presented in the previous slide was basically already agreed at COP21 as part of the Paris Agreement. It was a sort of high-level principle. And now at COP26, instead, we started carving out what were the rules for implementing Article 6. However, despite, of course, we have agreed that the broad framework, it's also fair to note that there are still many technical items and issues that to reach an agreement, they had to be to be deferred to the work program. So they're still to be decided in the very next months, and they're still under discussion at the moment. And so the challenge for now is to implement the rules that were agreed without compromising environmental integrity. And on Article 6.2, what was agreed was this accounting framework that was referring in my previous slide, which basically entails for any transfer of ITMO, of international transfer mitigation outcomes, there is an application of a corresponding adjustment. There are 3 methodologies that have been suggested for the corresponding adjustment. And this, you can think of it as a sort of a bank transfer where the parties make basically opposite entries. So the buyers of ITMOs would make an adjustment downwards in its emission balance, but the novelty of this accounting framework compared to the Kyoto Protocol is that now even the seller would have to make a corresponding adjustment now upwards in its emission balance. There is a bigger role for the host party in authorizing and approving, authorizing the credits to be transferred internationally. And there is also no banking of ITMOs possible across different implementation periods of the NDCs, which means that ITMOs can be issued within the 5-year cycle, issued and used within the 5-year cycle of the NDCs. And then the share of proceeds and the overall mitigation of global emissions, it's encouraged on a voluntary basis only. Then on Article 6.4, what was agreed is the mechanism was established. So now it is aligned, of course, with the 6.2 accounting for those credits that are internationally transferred. There is a mandatory share of proceed. Basically, you can think of it as a automatic discounting of credits at 5% and overall mitigation of global emissions at 2%. So each issuance would be automatically deducted of 7% in total. And then it was also agreed a transition of Kyoto activities and units to the new mechanism. And then for Article 6.8, just very briefly, it was established the Glasgow Committee for Non-Market Approaches. And just to say, as I was saying before, that the OECD and the IEA, we are participating quite actively in this discussion through the OECD and IEA Climate Change Expert Group. And so just to conclude, a few thoughts on what's next for Article 6 and international carbon markets. As I was saying, there are still a number of issues that are being discussed. The immediate next step are actually happening just in these very hours. There was a meeting of negotiators yesterday. There's going to be one today in the afternoon of Europe time, where the Ipcc sort of brought together negotiators to discuss a few issues prior to the international negotiations that are going to happen in Bonn in a few weeks' time. And there are a number of issues that are still to be discussed and agreed upon. These include, for instance, the reporting requirements, the registries, and how basically to implement, especially for Article 6.4, the mechanism. There is still a number of technical issues related to baseline methodologies, to additionality, that are still being discussed. And of course, we don't expect that the time is quite limited for this discussion in the intersessional, and so we expect many of these discussions also to be brought forward at COP27. But in the meantime, we cannot ignore, we heard from some of the speakers earlier about voluntary carbon markets. And of course, Article 6 has a big role, although Article 6 doesn't regulate voluntary carbon markets, but of course there is an inevitable interplay with them. And especially now that the host party has a bigger role in approving activities for participating in Article 6 and authorizing the credits to be internationally transferred or not, therefore applying the corresponding adjustment. And what is important, I think, and probably for discussion later on, is the role of the domestic regulation. So now host parties, those countries that voluntarily decide to participate in Article 6, would have to decide on a number of even domestic regulations on how to participate in Article 6, what type of projects they want to approve, what type of credits they would like to authorize for international transfer. And so we would expect that there's going to be much more movement on the host country side in devising strategies for participation in Article 6, which would have some effects on the voluntary carbon markets. For now, I leave it at that. I look forward to the discussion later on. Thanks very much again for the opportunity. Back to you, Kieran.
Thanks, Luca, for the succinct and comprehensive overview of Article. I'll move on now to our second speaker, who's Ms. Norika Tamahas from the Office of Market Mechanisms and International Strategy on Climate Change in the Ministry of Environment in Japan. Tammy will provide an overview of Japan's joint crediting mechanisms and highlight examples of implementation in Indonesia. And Tammy, if I could just remind you just to let us know if you need to move the slides forward, and the team will look after that for you. Thank you. Over to you.
Okay, thank you very much. Okay, so my name is Tammy Hase from Ministry of the Environment, and selamat siang for everyone in Indonesia. So today I'd like to introduce this concept and the recent activities of joint crediting mechanism in Indonesia. So the next slide, please. I believe that many of you have already known about the basic concept, but this is quite a brief explanation. So the joint crediting mechanism, JCM, is the mechanism under Article 6 of the Paris Agreement, which Luca explained right now. And this is owned by the both government of Japan and the government of partner country, Indonesia in this case. And the aim is to introduce decarbonizing technologies into partner countries, and reduction amount from that technology will be assessed in line with the methodologies approved by joint committee. Joint committee consists of both government and also approved by, verified by third-party entities. And the reduction amount is issued as a JCM credit in both countries' registries. And as Luca explained, at COP26, we finally agreed on the rule books on the Article 6.2. So we would like to explore our activities more, but this JCM started even before the Paris Agreement. The beginning of JCM is 2013, so it's a kind of phase 3 in the Luca's slides. And the next slide, please. Now we have 17 partner countries, and Indonesia is the 8th country which we have agreed upon about the joint credit mechanism implementation. And the next slide, please. And for developing JCM project, we have several financing programs. And the first one is JCM model project. It's called JCM model project, and it is subsidy scheme. And this is the biggest amount of budget in our office, and it's approximately $171 million for years, fiscal years 2022. And the second example is ADB Trust Fund, and it's called Japan Fund for JCM. This is an example of co-financing with multilateral development bank, and this is for the grant. Most of the projects are the sovereign project, but we also have some non-sovereign project. And the third example is this is a sector-specific financing scheme. It's for F-gas, fluorocarbon recovery and destruction model project. This is again the subsidy project. So the aim is to introduce the technology itself into the private companies in developing countries. And we also exploring a way to mobilize private finance, because public finance is limited, but we are sure that we need more finance mobilization of finance for reaching 1.5. And we also have the business matching site. It's called JCM Global Match. It's in the bottom line, I wrote it, the URL. So you can find the companies who want to supply some technologies, and also some companies who want to introduce those technologies. The next slide, please. And this is some examples of the JCM model project in renewable energy or energy efficiency, waste or transport. And I presented the 15 examples with a specific name of the Japanese countries. So I will put this slide on the website later, so you can check the exact name of Japanese companies who are involved in the JCM project. And 5 out of 15 slides, 15 photos are in Indonesia. And the next slide, please. This is a mapping of the financing project which are supported our financing programs, and it also includes some kind of a pipeline project. And Indonesia has 43 projects. This is the second largest numbers within our 17 partner countries. And next slide, please. And this is one concrete example of the project in Indonesia. This is an energy efficiency project at paper factory, and this is promote less utilization of less water and less electricity, but not only for the carbon dioxide reduction, but also it contributes to some SDGs target. For example, the education target. It contributes to education targets through training program for the staffs in the factory, or energy target through energy conservation, or sustainable economic growth target through high productivity. And so this JCM also sets specific indicator for assessing SDGs target arranged to the decarbonizing technologies. And we believe that those SDGs contribution is also a very significant for attracting private investment in the future. And we have the specific guidelines for the SDGs for JCM project, which I wrote in the middle of this slide. And the next slide, please. This is quite simple analysis of our approved methodologies and registered project under the JCM, not pipeline project, but methodology approved and registered project. And the left hand is about the methodologies. And if we look at the country by countries, Indonesia is the largest numbers out of 19 cases. And if we look at the right side, the registered project, again, the Indonesia is the largest number. In the previous slide, I said that Indonesia had the second largest numbers of the project, but that was about the including the pipeline project. But this slide is talking about the registered project. So I could say that Indonesia is the leading countries under the JCM schemes within the 17 countries. And the next slide, please. And this is again including the pipeline project, the analysis for the technologies transferred through the JCM. The largest number is renewable energy, and the second is energy efficiency. But we also have some technologies for waste, transport, RED+, and F-gas, fluorocarbon gases. And we would like to explore more of the methodologies or technologies with more variation. And the next slide, please. Then this is the concept of our registries of the JCM credit, because today's theme is about the linkage between some schemes. I think that the registry is quite important tools for linking several schemes. And the JCM registry is established by each country. Japan has our own registry, and the partner country, Indonesia, has their own registries. But we also have the minimum requirement for the registry, and it is called common specifications, but it is quite minimum. We started with quite minimum common specifications. So the reduction amount in Indonesia is issued in both registries, the registries in Japan and the registries in Indonesia. So with this issuance, international transfer, which is referred in Article 6, is already happening. So JCM credit is internationally transferred mitigation outcome in this sense. But after issuance in each country's registry, it is tradable domestically, but we have not had the linkage between both registries. And for making this international trading between registry and registry, we think that we need some to ensure the legal status in both countries. And we also we need to ensure some certain level of registry security so that we can really avoid double counting. And agreement of the Article 6 rules is also will also promote for further discussions for linking those two registries or the other registries under the JCM in another partner countries. And the next slide, please. And for the action towards the international carbon market under the Article 6 rules, we have started our domestic arrangement first, and we have established JCM Promotion and Utilization Council, and it has authority to authorize the JCM credits in line with the Paris Agreement Article 6 rules. And this council also decides the methodologies for corresponding adjustment. And we did a public consultation for those procedures for authorization and procedures for corresponding adjustment. And now we finalize. So now we have the domestic arrangement to implement Article 6 rules, which was decided at the COP26. And then we need to consult with the partner countries. So this is the next step. And the next slide, please. This is some details for the authorization. And today I will not deep dive into this details of this authorization, but I just wanted to introduce that as our activities as the latest activities to ensure the alignment with the Paris Agreement Rulebook. And we believe that this alignment is quite important for ensure the stability of trading of the JCM credits and other credits under the Paris Agreement, under the Article 6 of the Paris Agreement. So thank you very much. This is my at the end of my presentation.
Thank you, Tammy, for an excellent presentation that sets out some really tangible examples of how linkages and Article 6 can work in practice and to the benefit of both of the participating countries. And I think you'll be happy to take, and I'd like to think there'll be a few questions at the end of these presentations for you on that subject. Now I'll move to our third speaker, who is Ted Jemison from the ETS markets team in the New Zealand Ministry for the Environment. Ted will speak about the linkages between the New Zealand ETS and the international carbon market and demonstrate some lessons from past experiences from linking, which are useful in the context of the current discussions that are underway at the moment. So I'll pass you now to Ted and remind once more if you need the slides moved on, just to let us know. Thanks, Ted.
Thank you very much. Selamat siang dari Selandia Baru. Before I get it, hello, can you hear me?
Yeah, perfect.
Before I get into talking about the history of the New Zealand emissions trading scheme, I thought it might be worth mentioning that although this presentation is focused on the ETS as a possible mechanism for future cooperation, I'd like to mention that we have a relationship with Indonesia in geothermal energy, which goes back now for 60 years. And I hope that geothermal and New Zealand's and Indonesia's experience with it will be a significant part of this any future cooperation. International linking in our domestic emissions trading scheme. Can we move on to the first slide, please? Thank you. Some quick basics about the New Zealand emissions trading scheme and the features that it has had from its inception. Firstly, plantation forestry is a very big business in New Zealand, and it was a priority from the beginning and to put a cost on the loss of forest carbon and to reward the establishment and maintenance of new forests in New Zealand through the ETS. We have broad coverage of emissions except for the agriculture sector. Essentially, all of New Zealand's emissions are covered by surrender in the ETS. And the whole philosophy was about broad emissions trading and establishing a domestic price. The Kyoto link was also seen as important from the start, and it was an important policy aim to help New Zealand meet its Kyoto obligations. Next slide, please. The ETS has, in its 12 or 13-year history, we have gone through 4 different phases, and I'll go through them. But firstly, through the Kyoto Protocol first commitment period, we saw the New Zealand ETS as part of a functioning international system. From 2013 through 2014, we had the process of disconnection from the Kyoto system, which was actually quite a slow process for us. From 2015 to 2020, we had a domestic-only emissions trading scheme with a fixed price option, so that if prices rose to 25 New Zealand dollars, it would function as essentially as a carbon tax. And now from 2021 onwards, we have new legislated rules, including firm caps and auctioning in the ETS, which will prepare it for participation in new markets under the Paris Agreement. During the first Kyoto commitment period, only project units were accepted. There was a concern from environmental integrity from the start, but certification of units was left to the Secretariat and host countries for joint implementation. Noting that New Zealand also had experience hosting joint implementation projects ourselves, and we had some confidence in that process at the time. Okay, can we move on to the next? I will use traded prices for New Zealand's domestic scheme as a kind of proxy to illustrate the changes that we have gone through over time. These are New Zealand dollar prices, remembering the exchange rate is about 63 cents and has varied over time. So slightly lower than equivalent US dollar prices. So in that first phase during CP1, domestic prices in New Zealand were the same or slightly lower than international units in the Kyoto system. Some forestry offset units were exported from New Zealand in this period. There were no significant imports. And through up to 2011, 2012, we amended regulations to ban some Kyoto unit types due to concerns on environmental integrity, but there was no way for a small team in New Zealand to keep up with all potential issues that international emission units might have. In 2012, the government made a number of changes to the ETS. The government knew that prices might drop after the end of the commitment period, the first commitment period, but decided to keep the Kyoto link through the 2014 compliance year. That was seen as a political commitment that the government had made. And there was a concern, of course, at that time about recovery from the global financial crisis. And importantly, the government decided against introducing any quantitative limit on the import and surrender of Kyoto units. As you would know, Kyoto prices did fall to very low levels. And on the other side of the world, a very large number of joint implementation projects were approved retrospectively by the authorities, particularly in Ukraine, and units issued in a very short time in large numbers. New Zealand users and sellers discovered and imported them. This happened to some extent in the EU ETS as well, as people will know. and emitters in New Zealand surrendered significant numbers of Kyoto units and banked the New Zealand units that they were issued or had acquired against future use. Through from 2015 up until 2019, we had a domestic-only scheme with rising prices, but a slow process of slowly reducing the bank of units that emitters had saved from the previous opportunities that they had had during CP1 and up to 2014. Prices rose and approached the fixed price option of $25. Then in 2021, new legislation which we had passed in 2020 came into effect, bringing in caps on supply, auctioning, and a cost containment reserve instead of a price ceiling. So now there is a limited reserve of units to be auctioned as the only restraint on price rises. And we can, of course, see what has happened to domestic prices since then. Can we go to the next slide, please? Auctioning creates revenue, and auctioning revenue from the ETS is now dedicated to a climate emergency response fund, which will initially support domestic action, but could be have international application in the future. The government now has a complex legislative process to develop and implement legally binding budgets for domestic emissions and emission reduction plans. And our first very detailed emission reduction plan was in fact just released yesterday after a long process of development and consultation. That reduction plan makes clear that our domestic mitigation pathway to our legislated target of carbon neutrality in 2050 will not match exactly to our current or future NDCs. New Zealand will likely need some offshore mitigation. And the same new legislation allows for links with other ETS schemes and places a legally binding responsibility on the government to ensure environmental integrity. There is also a clear legislated process to manage supply in the ETS by setting caps 5 years ahead. Can we move on, please? This graph is simply to give an approximate indication of how supply is reduced over time. It's provisional at this point. These numbers will be adjusted and are likely to come down. But any imported units, any offshore mitigation that may be used as part of New Zealand's interactions with other countries in the near future has to be a subtraction from the bottom part of this graph, the blue section, which is units to be auctioned. So to maintain the cap, any imported mitigation is a subtraction from the amount to be auctioned. Can we move on again, please? This is just taking us back to the price path to show us the 5 auctions that have happened so far through 2021 and the first quarter of 2022. Each of the dots on the graph is an auction, and the graph shows what traded units in the secondary market have done partially in response to these auctions. there is now a cost containment reserve, as I mentioned, and the trigger price is $70. So traded prices actually exceed the cost containment reserve trigger price, meaning the cost containment reserve units will be released, and that participants expect future prices to keep going up. The trigger prices will be increased over time as well. They are currently planned to go to $110 in 2026. So secondary market prices can exceed the trigger price. Can we move on, please? And this is to finish with some reflections on what this may mean for the future. What we have experienced in the Kyoto period, to some extent, has been a loss of policy control. And we think it is very important for New Zealand's future in these markets that we will build in the flexibility to make changes and to ensure that any linking agreement or cooperation agreement under Article 6 allows for management of our domestic emissions trading scheme and our domestic price. Both parties, of course, will be responsible for environmental integrity, both for the integrity of reductions that are traded and for accurate accounting. And we need to balance our own domestic policy and the important role of emission pricing as a tool for managing our domestic emissions and our planned pathway to meeting domestic targets against the benefits of international cooperation. So the benefits of allowing price convergence are important, but we think it will be some time before we would be in a world of allowing prices in New Zealand's domestic ETS to match prices in a linked jurisdiction. Final thought is that oversupply, this is no surprise to anybody who has been involved in domestic emissions trading, is a common issue and arises in different ways in different emissions trading schemes. It takes time to work out of the system. And having experienced some loss of policy control, it is a long and difficult process to come back. Thank you. I think that's all I had to say.
Thank you, Ted. Thank you for your wonderful background to the New Zealand ETS, but more importantly, I think for those closing reflections on your slides, which I think are very, very helpful guidance to any country thinking about future linkages or design of the ETS, such as Indonesia. And again, we'll be happy to take questions at the end of the session from anybody about Ted's presentation. Our final speaker is So-Young Lim, who's the Deputy General Manager and Advisor on EU negotiations in the Climate Policy Support Division in the Korea Environment Corporation. So-Young will speak about the linkages between the Korean ETS and the international carbon market. And once more, I'd like to remind the speaker, if you need us to move the slides on, just to let us know. Thank you. Over to you, So-Young.
Can you see my screen well?
Yes, we can see now.
Yes.
Okay, thank you, thank you. Good afternoon, colleagues. I'm So-Young Lim, as introduced, from the Republic of Korea. First of all, I'd like to thank you organizers for inviting me this meaningful dialogue with the Indonesian colleagues. Actually, today's topic of my presentation has been slightly changed because since I'm not engaged in the Korean ETS at this moment, so I mainly I will mainly focus on decarbonization strategies and Article 6 implementation plan of the Republic of Korea. As you may know, our new president, Yoon Suk-yeol, took office exactly 1 week ago. In this transitional period, it seems difficult for me to tell you detailed strategies or policies of Korea like colleagues from Japan and New Zealand, by the way, which were really constructive and useful presentation for me. Nevertheless, I decided to today's meeting because I thought it would be a great opportunity to have a good relationship with the Indonesian colleagues in the future. So hope you have a meaningful time as well. Before starting my presentation, I'd like to briefly introduce my organization. Korea Environment Corporation, KECO, is an affiliated organization with the Ministry of Environment of the Republic of Korea. We are sort of the acting organization implementing almost all environmental policies in Korea. In particular, regarding the climate change issues, we've been implementing various policies from Korean ETS to electronic vehicles. Among them, I've been dedicated to UNFCCC's negotiation process, especially on Article 6 international carbon market issues since 2016. So I'm the old friend of Luca. And as you all know, the Paris Agreement adopted in 2015 opened the new horizons for international climate change response regime. In particular, the long-term temperature goal stipulated in the Paris Agreement has initiated the discussion of carbon neutrality at the global level. And of course, nationally determined contribution NDC, NDCs have been serving as a mitigation target for each country to achieve the 1.5 Paris temperature goal. The Republic of Korea has continuously updated its NDC to fulfill our obligation faithfully as a party to the Paris Agreement. Especially, I'd like to highlight our NDC update. In December 2021, Korean government raised its target to the reduction level approximately 100 million tons. I'm convinced that it is a quite ambitious action, as it is a leading implementation of the Glasgow Climate Pact, in which all countries promise to enact their 2030 NDC target by the end of this year. So we now became sort of the fast mover. In addition to our 2030 NDC target, I'd like to highlight our important step for carbon neutrality. In December 2020, the Korean government officially submitted the long-term low emission development strategy, so-called LTLS, with the 2050 carbon neutrality goal to the UNFCCC officially. Afterwards, the Presidential Committee on 2050 carbon neutrality was established, and about 100 experts from all sectors related to climate change were appointed as members. As the most meaningful step, we completed a series of preparations towards carbon neutrality by enacting the Carbon Neutrality Act in September last year. According to the most recent Ipcc report, there are direct climate laws focused primarily on GHG reductions in 56 countries, and we are one of them. The Carbon Neutrality Act is enacted 2050 carbon neutrality as an ultimate long-term vision of Korea, and set a 2030 NDC target as a midpoint target in the pathway to achieve carbon neutrality. In addition, it is based on the principle of just transition to buffer social and economic impacts could rise during the transitional period. Finally, it introduces new policies, including Climate Action Fund and GHG mitigation responsible budgeting system. As of 2022, approximately $1.8 billion US has been allocated for the purpose of the Climate Action Fund. In addition to climate law, the Ipcc report highlighted the importance of the carbon pricing as well. As of at the end of 2020, over 20% of global GHG emissions were regulated by carbon taxes or emission trading system. The Korean government also has introduced our emission trading scheme named the KETS since 2015. As a key mitigation measure, approximately 73.5% of our national greenhouse gas emissions are covered by KETS now. I do believe that KETS has played an important role to establish a virtuous cycle of a low carbon system. And now move to the Article 6 implementation plan. Through our newest NDC, our government has expressed our intention to use Article 6 of the Paris Agreement. Domestically, the Carbon Neutrality Act provides a legal basis for implementing international cooperation under the Article 6. Earlier this month, the Minister of Environment of the Republic of Korea and the Minister of Environment and Tourism of Mongolia signed a memorandum of understanding to initiate the Article 6 cooperation. I will look forward to having the Article 6 cooperation project with the Indonesian government in the nearest future. And finally, as I mentioned earlier, our new administration has initiated its work to establish detailed implementation plan to achieve 2030 and this target. This 2030 reduction roadmap will include the sectoral targets and measures, investment plans for new and innovative technologies, and of course, Article 6 implementation plan. I hope that it will publish at the end of March next year, so I may provide more detailed information next year. This is all I have today. Thank you.
Thank you, Seon, and thank you for that very nice final slide. At this point, I'll pass you over to Batty, who will manage the questions and answers. And because we're running short on time, this is going to be limited to a maximum of 10 minutes. But if there are further questions, we may be able to take them in the third session. Thank you. So just let us know if you have any questions for any of the speakers. And in case you're not aware of it, you can use the raise hand function at the bottom of your screen to do so.
Maybe the question starting from you, Kiran, to explore more from the speakers.
Yeah, perhaps just a question for Tammy on her presentation and Japan's work on the JCM. I'd be interested to know what's the process they use in Japan to identify the projects that they select. For example, the projects in Indonesia, what attracts them to those particular projects and what are the advantages for Japan in selecting those projects?
Thank you very much for your question. Actually, we are not selecting. It's basically the private companies have the proposal to us, to our financing schemes. So we have many of consultations from the private companies, and we also consult with the companies, but we have some standards for the JCM project, and this standards is assessed by the third party kind of council. It's apart from our ministry, and that council has some finance experts and also the technology experts. So they check every standards for those elements. And if the project clears some level of the standards, they can be supported to our financing schemes. So this is the process. Do I answer to your questions?
Thank you, Tammy. That's very, very helpful. And perhaps a quick question for Ted on New Zealand. At the end of your presentation, you presented some very, very helpful reflections on your experience in New Zealand. How do those reflections influence the design of the future changes to the design of the ETS and how you engage in international linkages and cooperation?
I think we don't yet have an agreed strategy for international cooperation. That is still ongoing work. But in terms of the design of the ETS and the legislation that we have passed in the last 3 years, I think it's done two things. It motivated us to develop and legislate for a system of cap setting and supply management in the ETS, which tries to achieve a very careful balance between certainty and integrity going 5 years forward, and enough flexibility with the ability to adjust those caps downwards if required to allow for the impact of any connections, any flow of immersion units from another jurisdiction, among any other issues. The second thing is that we have legislated for qualitative caps on any use of offshore mitigation in the ETS. The government must regulate to limit the use of offshore mitigation over time as part of that cap setting process.
Thank you, Ted.
So we have built some of those protections into our legislation.
Thank you, Ted. So what you're offering in the medium term is some level of certainty to the market, but the flexibility to adjust as the needs arise.
That's right.
Thank you. And I think that's very, very useful concept for anyone thinking of implementing or designing a system. I understand there may be a question from Thomas Wagner, who's in the audience, if you'd like to come forward.
Yeah, thank you very much. Maybe a question for Ilham. In fact, two short questions. One is, you were talking about linking markets in Indonesia and internationally, but you also mentioned that export of credits would require ministerial permits, which would only be issued when the national targets are fulfilled. Does that mean that, for example, JCM projects will only be possible as soon as Indonesia has already achieved its targets, or how to understand that limitation? And second, there's some confusion about the tax and the trading system. And the question is, will the participants in the trading scheme be allowed to basically purchase credits through paying the tax if they cannot get them in the market? Thank you. That would be for Ilham, I guess.
Is Ilham still in the room?
I don't think so.
Well, how about Eddie? Is he still here? Or anybody else who might have the answer?
Or maybe we can explore in the next session.
Yeah.
Thomas?
Can do. Thank you.
Thank you, Thomas. And Kevin, if you could come forward with your question, please.
Thank you, Mr. McNamara. I do have two questions for two different panelists actually, but I do notice that Mr. Eddie is no longer here. Pak Hakim, kalau boleh konfirmasi, apakah Pak Eddie masih ada?
So if I can confirm to Pak Bati, what about Pak Eddie? Pak Eddie, are you here? Well, we can actually look at the list of participants and there's no name of Eddie. Anyone from OJK or Financial Services Authority? I think there's no one from OJK or the Financial Services Authority.
Maybe Mrs. Tami can answer that question from JCM side. Is it actually possible to export credits from Indonesia currently, or will that only be possible in excess of what Indonesia needs for reaching its own target?
Thank you very much. I understood that the question is about the JCM credit in Indonesian registry. And in my understanding, currently Indonesian JCM credit is registered at the National Registry System for Mitigation. And I think the short answer is that point is still under discussion. So I think that in principle, Indonesia is thinking that the credit in the Indonesian registry can be exported to the other countries only after the NDC achievement of the Indonesia. But so this is a principle, but I assume that they are now discussing how to, if it becomes possible, maybe they need some, how can I say, institutional arrangement for their registry to export that credit to the other countries. So this is a kind of second step, only after the achievement of their own NDC target. And as for the credit issued in registry in Japan, at the time of first issuance, the credit is already issued in the JCM registry in Japan. So Japan can have that, how can I say, reduction amount in our registry. So that, again, your question is about the credit issued in the Indonesian registry, right?
Yeah, well, it can of course be registered in the Indonesian registry, but my question is whether Indonesia will allow to surrender those credits to Japan before meeting its own targets. And if not, that basically means JCM cannot work until Indonesia has actually achieved its own targets, correct? Oh. Of course, unless there's an exception on a bilateral basis, possibly, that we don't know yet.
Okay, but again, so at the time of issuance, the reduction amount is divided into two registries. One is registry in Japan, and the other is registry in Indonesia. And currently it is possible and it is happening. So do I make myself clear to you? Question?
Yeah, then that is clear. So that is currently possible despite not really.
Yes, currently possible and it's happening. Yeah, thank you very much.
Thank you.
Baik, Bapak Ibu sekalian, kita lanjutkan ke sesi ketiga.
Very well, ladies and gentlemen, let's continue with the third session. So the third session is actually the big question and answer session, the open discussion. Now I will now switch to Indonesian language in my moderation, so we can encourage colleagues from Indonesia to raise their questions. So now I would like to open this session, but then we may not have a lot of time. We only have probably 15 to 20 minutes. So I will now open the floor for two questioners So anyone, feel free to raise your questions in either English or Indonesian. You can use the raise hand feature to indicate that you want to ask some questions. Anyone else other than Pak Kevin? So I received information that Pak Edi from OJK, or Indonesian Financial Services Authority, is doing his afternoon prayer. So he will probably join us later after his prayer. Anyone else raising their hand other than Pak Kevin? Otherwise, let us start with myself. I have questions to Luca. It's in English.
As we know that GCM mechanism is introduced before NDC. And then according to Article 6, is it possible the GCM project to fulfill the NDC target? What do you think, Luca?
Thank you very much for the question. Definitely, as Tammy has presented before, the JCM is one of the possible bilateral mechanisms that could potentially qualify under Article 6 for bilateral and multilateral exchange of credits that they can be then internationally transferred and become ITMOs. So that's definitely possible. It would depend then on the intended use that the Japanese government wants to have it. Of course, there are some eligibility criteria that the projects would have to respect in order to be part of Article 6. So what changes from the previous regime to the current one are differences in technical nuances. For instance, how you apply a crediting baseline. Now it has always have to, before it was accepted that it was on a business usual, forward-looking business usual level. Now it has to be below business usual. And for instance, the additionality criteria and the additionality test would most likely change. Just for those who are not familiar, additionality refers to the to try to test if the activity, if the project would have happened even without the price signal from the carbon credits, and if not, then the activity is additional. And so now this changes because we have the NDCs. In the previous regime, we didn't have the NDCs, so we didn't have national policies framed in where the country would have had a target, but now we do have a target. So we have all this complication that Mr. Wagner was mentioning before. What would the country like to retain the mitigation achieved from projects within their boundaries for the achievement of their own targets, or would they forego the mitigation for international purposes to be used for other countries? And they would then have to apply a corresponding adjustment. And we have argued for this in a paper last year, where we basically were arguing that, in our opinion, it would be useful if countries that intend to sell, like it would be the case, for instance, of Indonesia, in this country, in the new markets, they would have to go potentially under an exercise where they look at what is the mitigation spectrum of activities that they have within their own boundaries, and it would be wise for them not to forego the cheapest mitigation action, because if they have then to apply a corresponding adjustment, that would mean that they would have to spend more in domestic measures to be able to attain the same goal. And so the same would apply for the JCM on the opposite side. So Japan would be most likely, as far as I understand, a buyer. It has already this great mechanism in place since many years with a lot of very good base knowledge. So in my opinion, the JCM could be a very good example of and pioneer of Article 6 cooperation with the right adjustment in terms of eligibility criteria. I hope I answered your question.
Thank you, Luca. Now I move to the question for Ted. You said in your presentation that in 2015 and 2020, the New Zealand is only implement the domestic only trading. Could you share to us how to translate from the only domestic to include the international linkage? Thank you.
To transition. Hello, can you hear me?
Yeah.
Yeah. To transition to international trading from our point of view and in our policy framework, there are actually two different pathways and not exclusive, we might do both. One is linking directly to another emissions trading scheme. That would mean that we allow participants to buy units from offshore and to surrender them in New Zealand. Our legislation requires that that be strictly rationed and that the government impose a quantitative limit on participants if they are allowed to do that. The other possibility is that we involve ourselves through something analogous to the JCM. We don't have either an established mechanism like the JCM or, to be honest, the resources to create one, but it is certainly possible that the government may decide in the future to use some of the resources that it is dedicating to climate action through our Climate Emergency Response Fund to participation in bilateral arrangements with other countries, which would involve benefit sharing and transfer of mitigation outcomes to New Zealand. And that would require, well, a linking would require detailed agreements too, but certainly the more direct participation would involve a very detailed cooperation agreement and agreement on accounting and corresponding adjustments bilaterally with any prospective partner. So those are both possibilities, but we are some way off having a clear strategy for that at present.
Thank you very much. Bapak Ibu, apakah ada yang lain yang ingin bertanya? Silakan raise hand. Pakai bahasa Indonesia juga tidak apa-apa.
Do you have other questions? If you have questions, feel free. Please raise hand. You can use bahasa Indonesia if you want. I received information, then Pak Edi will not join us again. But there was a question from one of the participants at OJK. The question is, when will be the regulations will be issued related to the ETS implementation in the Indonesian Stock Exchange? How about the status of SPE and PTE here? Probably they are our colleagues from OJK, probably Mbak Isti or other other colleagues from OJK, and please respond. When will the regulations be issued?
Ada Mas Jun di sini, sebentar Pak.
Ya.
Oke Pak. Ini Pak izin ini Pak Edi ada Pak.
Ya.
Ya Pak, kami peraturan terkait dengan perdagangan karbon Pak. Ini sebenarnya kami secara paralel menyiapkan ya Pak.
Okay. Related to the regulations, we have parallelly preparing it. We have prepared it in parallel. but of course, it will be related to the delegation to the Indonesian sections. But we're preparing it. We are formulating it. And we are still waiting for the second stage. Okay, thank you very much for the information. As presented, the position of our friend, our colleagues here is in the waiting mode for the assignment. They're still in the wait for the assignment for that. Okay, ladies and gentlemen, it's already 4:35. It's already past our time. So I would like to ask for final remarks. Okay, please, Pak Nugroho. Probably you have a final remarks. I will speak on behalf of him. Oh yeah, sure. Okay, thank you very much, ladies and gentlemen. From Marves also Pak Ilham, Pak Edi Broto, and also we have from IAA, Ms. Lade, and then the Department of Forestry from South Africa. We have our colleagues here from, and also Ibu Tami from Japan, and Bapak Tad Jameson from New Zealand, Ministry for the Environment, and also from Korea, if I'm not mistaken, Ibu Kim. And our discussion here as very comprehensive, and we have learned about the theme about gap, trade, and tax in different countries, and it really enhances our knowledge related to these topics. And we also try to, especially in this April, and in this July, the 1st of July, we will start and continue, and it can be served as our preference for the implementation of cap, trade, and tax in Indonesia. Again, thank you very much for our speakers. It's very fruitful. The discussion is very beneficial for all of us. And hopefully we can create clean energy in the future, so we can provide a guarantee of a better life for our future kids. Okay, thank you very much. Okay, thank you, Pak Bayu. Okay, Cecilia, over to you for the final remarks.
Thank you very much, Patsy, and all the colleagues. Dear Pak Piharto, distinguished speakers, ladies and gentlemen, we've had a very fruitful discussion today, and I'd like to thank all of our international experts, Sidizwe, Luca, Tammy, Ted, and Taeyong, for sharing your country's experience and your knowledge with us. Thank you also to Pak Ilham and Pak Edi for sharing with us Indonesia's plans for linking to international markets and regulation to govern carbon trading in the financial markets. There's been a lot of information shared today, and the OECD is pleased to support our colleagues in Indonesia to benefit from the lessons learned in other countries for to consider how to design your country's emissions trading scheme. I'd like to thank all of our Indonesian participants for their questions and participation during the discussion today. Building on a very fruitful cooperation between the OECD and the government of Indonesia, the CEFIN program is supporting Indonesia's efforts to mobilize domestic and foreign sources of finance to accelerate investments into clean energy And the implementation of an emissions trading scheme in the power sector will be an important milestone to support this transition. We'd like to commend DG Electricity for the development of the emissions trading scheme and to thank Pak Paharto, Pak Wanhar, and Pak Bayu, and all the colleagues from DG Electricity for their collaboration these last months to ensure a successful series of FGDs. These have been very well attended, reaching between 150 and nearly 200 participants over the course of these 4 focus group discussions. I'd like to thank my colleagues from the IEA, Sarah and Kieran, for collaborating with us to organize this series of FGDs. Finally, today's FGD is the final in a series of 4 that we've had the pleasure to organize together with the IEA and DG Electricity to allow for a sharing of international experience and to provide technical support on a number of critical areas for consideration as Indonesia develops its ETS. We hope that these 4 focus group discussions have provided insightful lessons for Indonesia as it advances its low carbon transition. And on behalf of the OECD and the IEA, we look forward to continuing to support Indonesia in its low carbon transition. We will be preparing a summary paper from the 4 events that we've organized these last months and to provide some important messages coming out of these discussions. A final thank you to Pak Bati for being our MC today and over the course of the 4 sessions. Special thanks also to our interpreters for their excellent interpretation. And finally, a big thanks to Dominique, who has supported us in running our 4 meetings, and to Jeremy and Ibu Isti for their work on the FGDs. I'd like to end our discussion today and to wish everyone an excellent day. And we look forward to welcoming you in future events. Thank you very much, everyone.
Terima kasih banyak, Bapak-Bapak, Ibu sekalian.